Hi everyone, it's Laura Atherton with Your Certain Real Estate and Finances. I'm pleased to join everyone today that can come on or watch this recorded video. And I'm here to talk about taxes. I know you're surprised that I want to talk about anything fun and finance, right? Or some of you may be already groaning. I hope to share some really great and valuable information today. I'm actually going to dig pretty deep into understanding taxes and understanding how you can use them to build wealth. As well as I'm going to share my own experience about the all scary audit. So just to open up a PowerPoint and share with everybody, and we'll walk through our meeting today. So certainly if anyone's seen any of my stuff before, my goal in anything is to share information. I'm also extremely positive, sometimes annoyingly so I'll try not to overdo it. But I truly believe that through strong understanding and information, we can make things positive. So whether we are groaning about the time of year and taxes, what if we were to be able to turn that around and change that? Certainly it's not an overnight that we can make a complete change to your taxes, of course. It takes a little bit of effort and planning, but with good strategy, you can certainly have good financial health. And so that's what our topic's going to be today. So really, again, that whole piece around where and how are we feeling? So am I the only one, or has anyone else had a negative tax experience? It seems to come from somewhere that many of us aren't excited about this time of year. Is it the amount of paperwork that we have to do, the organization? So I'll really get in deep today on some of those tools that we can use to simplify that process. And on the other side, like I've said, is the lack of understanding or awareness on how taxes work. So we'll talk about the difference between tax credits and deductions. So, you know, I don't want it to be that you have no idea why you got a refund or why you have to owe tax. I've worked with a lot of entrepreneurs and for self-business owners. Have you struggled with getting a mortgage? Have you struggled with other qualifying factors? And did you ever consider that how and what you're looking at your tax might make a difference for you? Are you confident that you are claiming all those deductions available to you? And is it the right strategy? So again, how many and what are those deductions? What does that look like in your business? What, you know, accurately filed, but also what are you looking at for growing and building wealth and qualifying for different things? So sometimes there's a couple of different factors that we need to look at the same time. So, and really from this, my hope is throughout this session and going forward, any coaching strategies, bookkeeping, or even tax preparer support that you get from me is that you understand that you can change your tax circumstances. It's not just is what it is. It's actually fully and completely dependent on so many things that you actually have an ability to change. So refunds, we all want them, right? Well, I don't know. So my stepfather always said that he wanted to pay lots and lots in tax. And of course, we all thought he was crazy because who in their right mind says they want to pay a lot in income tax? But from a very basic situation, he's right. If you're paying tax, you're making money. And what I always say is they're not taking 100%. Now, we all complain about how much the government may take. Regardless of that, it is not 100%. So I always say, why would I not make a dollar just because I'm not keeping the whole thing? I'm happy to make more money and pay taxes in order to build the wealth in the life that I want. And that doesn't mean that I'm not going to strategize around it, but certainly my strategy isn't going to be getting a refund because I had no idea what I was doing for the year, and really I just paid the government too much money. So out of this, I don't want anyone to be using the government as their savings plan. And I do hear that a lot, right? And especially when if we've been in a circumstance where we've expected refunds. I mean, there's many circumstances like that where you might be a single parent. You might have a family member with a disability. There's many different deductions that actually I understand are going to give that piece of that refund. And in looking at that, you know, those are conditions, but to actually overpay your taxes in order to have a chunk of money for that travel or that vacation plan, well, technically you've just allowed them to make more money on your money, as opposed to you having that in your own savings plan. You also don't have any control about when you get that money back, because they control when you get it back based on tax season. it's not like you can file your taxes. If I've overpaid my taxes and I'm like, oh shoot, I want extra money for Christmas, I'm going to file my taxes in November. It doesn't work that way. So, I mean, there's a number of factors around how we want to make sure that we're paying the right amount of tax. I think that's, at the end of the day, what I'm looking for to support everybody in, is that you're strategizing, you're being accurate, you're being fair, we're simplifying the process, and you're doing what's right and best for you, your business, and your family. So let's do that. Let's take control back, right? So understanding the tax strategy is that's going to get you what you want. And so the biggest and first thing I do with any clients that I'm working with is look at what are your goals. So what are your goals in the next year, 3 years, 5 years, long term? I need to discuss your goals with you to understand your tax strategies. So if you're working with someone or yourself to do your own taxes, make sure that those are the questions first. Where are you striving towards? And then what strategies need to be put in place? And understanding different components. So I work in real estate as well. I'm a real estate investor. So many people talk to me about their want to purchase real estate, may that be for their own house or obviously looking at investment opportunities. Do you know those other pieces that you can use around that? So rather it's specifically looking at your own house, the new home buyer's tax credit that can be applied. Are there specific years that's better than another year to strategize? Is there strategy that you might use with using an RSP plan more and maybe doing some additional RSP savings for the home buyer's plan? And is that valuable for the difference in understanding how those savings can affect your taxes? So I do a whole separate segment on understanding RSP versus tax-free savings account. But just in a general piece there, this is something to definitely strategize. When you're looking at tax deferral programs and different types of planning, we want to make sure we understand them fully so that you're getting the benefit, not the government. So let's talk about tax deductions and tax credits. Certainly I've had a lot of circumstances where people think that they have all sorts of deductions or credits and don't understand why or how that affected their final return. So essentially, my whole goal is to simplify this. I understand that it can be complex, and I'm not bringing it down to say that our tax systems aren't complex, but let's break it down as simple as possible and then delve into areas individually as you need. Reach out to me for a coaching or a follow-up session on your taxes. I'll also do a free tax review if you would like me to take a quick peek and take a look to see if there's something that I might have recommended for change. So tax deduction is going to lower your taxable income. So basically, if that creates or generates a refund for you, that's because it essentially brought down completely your income. So it's based on lowering your tax bracket, okay? Whereas a tax credit reduces the tax you owe. So you can see in the examples here, in one example, it reduces the income. And in the other example, it reduces the tax payable. And you can see that the difference that a tax credit is generally going to be a higher value. What we want to look at now is the difference between if it's a refundable or a non-refundable tax credit, because understanding that the majority of tax credits are non-refundable. Basically, that means that as soon as you don't owe any money in taxes, it's not going to bring you into a refund. And so whereas a refundable tax credit, you will still get that. And that's where a lot of people, I find sometimes when we're filing taxes, won't understand that. I had all of these tax credits, why am I not getting a refund? Well, what it's really done is reduce the amount of tax that you pay. Where most people do get a refund is because by applying these tax credits, we did essentially overpay the government. So generally dependent on what your tax circumstances are. And so for business for self, this can look very different because if you're not paying tax through the year, now what we're looking at is reducing that tax that's going to be payable at the end of the year or quarterly for you, depending on what kind of a taxpayer you are. So just understanding how that works on the refundable and non-refundable tax credits. Non-refundable is only going to bring you to zero. Refundable will be worth its value. So that's where the RSP program, but that is a tax deduction, not a tax credit. So again, not to confuse that, is that the RSP is still actually reducing your income. Working tax benefit, so that's based on qualifying eligible working, that will go directly off of your tax due. And so without getting too detailed into every credit and back and forth, it's just a general understanding on how they work. So more importantly, and we touched on this from the very beginning, like, what is your negative tax experience? And maybe many of you have never had a negative tax experience, so even better. If you're jumping out of the gate, you want to learn everything and have this strong understanding and not have a negative experience, that's awesome. That definitely would be my goal for everyone, is turning it to be positive. But certainly, I mean, I'll share. I mean, I think one of my first negative, or my main negative tax experience, was I started working, well, it's an interesting negative tax experience because I started working with a very mean accountant when I was 16 as a part-time job. And to be fair, she ran a very busy small business out of home, and tax season it blew up. It was overwhelming. We were working 14-hour days. She did not probably bring on enough staff. Obviously looking at that bottom line that most business owners are looking at, and how can we hire versus how much we need to still be able to make. That, I think that'll be a whole separate session on strategizing our income as business owners whilst bringing in the right support. So we worked really hard. I worked for her actually for 3 years until I actually opened my own tax. So I opened my tax business, would have been at the end of the year that I was 18. I started my own tax business, but I continued on with her for 3 seasons actually, and learned a lot. What my negative experience was that before I learned a lot, I really didn't understand taxes. I understood that I had done some part-time work and that I would get a tax refund. That's what it was. I was in Ontario. We would get our sales tax credit back, I think, at that time. I won't age myself on how long ago that was. And it being a student, I basically, whatever tax they took, I got back. So taxes were fun, right? Taxes was about filing. We want to file them as quickly as we could and get a refund and go shopping. I love shoes, so I won't even go there. And anyways, I owed something like $700. And so with that, I was shocked. How could I possibly owe $700? I'm a struggling student. I don't have any money. I certainly didn't have the $700 to pay to the government. So that was my kind of biggest shock and negative experience around, oh, I need to be better understanding. And of course, I see that experience happen quite a lot, especially in young people in that circumstance where they're just starting working. And I had actually worked a fair bit, and I'd worked a number of different part-time jobs, and they didn't take, each individually took the right amount of tax, but combined based on my income, because I was working more than one job, I did not pay enough in income tax, which is what resulted in that payment that would be due. So, that's one example of just not understanding how taxes worked. I assumed that by having a basic employer that they would take the right amount in tax, but they don't see everything. The whole point of when we're filing our taxes is to combine all of that together, right? So that they see our entire year all together, where each employer doesn't see that. So think about your negative tax experiences, and what I would wonder, or please drop me a line and share with me, but what I would wonder would be, would your experience be changed by knowledge? Would your experience be changed by working with someone who could share and support and ensure that you understand those circumstances, working with someone who can help you plan around your finances to adjust and change so that you're prepared? And so being prepared will lead right into audits. I knew I would make friends watching this today because, if I mix the words taxes and audit, I know for sure no one wants to listen to me technically. But so here's a little multiple choice, right? So what do you think of when you hear the audit? Are you going to run screaming? Are you going to change your address and move? It's no big deal. You're just going to provide the information. I mean, that's the goal that I get to for sure. Just take my money, but don't take me to jail. So mark which one you are, because that's going to give you good insight on what areas, if any, that you need to change. And maybe you've got a big check mark and it's totally fine, but this is what I'm here to kind of share and talk about today. Okay, so baseline, I love my definitions. So looking just at this, so an objective examination and evaluation of the financial statements of an organization to make sure that the records are fair, accurate, representative of the transactions they claim to represent. So the audit can be conducted internally by employees of the organization or externally by outside firms. So you'll hear a number of cases where people are paying for prepared by audit with an accountant. The CRA comes, they can certainly be doing and completing the audit. There's different levels, but overall, does that really sound that bad? Like for me, I would want my records. And so why is it nerve-wracking? It's the examination, the evaluation. I think, certainly I'm as organized as I can be. That being said, I'm not so sure that it's my organization that I'm concerned about. I can always increase tools, and I'll share a number of them with you. But really, it's the idea of someone else reviewing for me, my records, and evaluating. And if I wasn't sure, and I think we've all done this, if I put something in and I was like, I think it's tax deductible, so now all of a sudden I'm scared. Did I claim something that I should or shouldn't have? I think maybe that's where the fear comes in. So I'd love for people to think about where or if you have that fear at all and where it comes in for you. So types of audit, very simply again, a full audit, okay, is a review of a company of individual records. That means that may that be one or however many years that the government is reviewing, it is a complete review. What is a very standard audit, and often called or referred to as a mini audit, is just a request for backup. So again, I'm trying not to age myself, but back in the day, we used to do our taxes in handwriting and math, and then we would mail that all with all the receipts and all the T-slips attached to the government in whatever size package that we needed to. And, at some point, looking at the amount of paper, the Canadian government chose to trust us, thankfully. We're usually quite honest, I hope, that we would file the accurate information on our tax return, and they would conduct what would be called a mini audit. So every year, so many letters go out. It's not necessarily because of a red flag. So many letters go out to review that information because the government is no longer asking for all of it to be mailed. Now, they already receive all the copies of our T4s. Any registered T-slip that's provided is also provided to the government. So it's really those additional claims. So that's where people have stress around claims with medical, looking at any of those additional childcare expenses that we might be putting on our tax. The government is simply asking us to show them the receipts for that claim because we no longer mail them, which we used to. So that's simple. And hopefully all of your records will be easily prepared for audit after our session today. So the most common errors. So this is basically, and I think I've touched on some of this, underreported income. So underreported over pieces where your income isn't correct, overclaim business use of home expenses. So do you understand how to qualify and claim the percentage for home expenses? So that's something I want to make sure any business owner is aware of. Again, what's your telephone and utility expenses? So being fair, that was that part of in the audit. So I use my phone and my internet for business all the time, but what percentage of it am I using for personal? So it's very easy if I have two separate lines, a business as a person and a personal line, that's very simple, but most of us are running off the same line. So what percentage of that's being used for business? Overclaiming meal and entertainment expenses. So the meal and entertainment expense when we're out with a client, baselines on that tracking is you write the name of the client you are meeting, and it is a 50% claim. So just because you were in a business meeting, unfortunately, the government's not paying for our meal. It's still a 50% claim. And I think that's one that most people get wrong. And they think, oh, because I was with the client, then I'm going to claim 100% of this expense. It's 50% of all business meeting expenses. Overclaiming motor vehicle. Again, if you don't have a separate business use vehicle, and I'll talk a little bit more, but definitely looking at mileage logs, how are we tracking the use of that vehicle? It's about fair. It's not about it's being fair and reasonable, claiming the right amounts within reason. Capital costs versus current expenses. So again, I've mentioned about my real estate expertise. Certainly that is one, but also you see it in small business where sometimes people are claiming that brand new Mac workbook into a current expense at 100%, as opposed to depreciating it through capital cost allowance over a period of time. So it's just understanding those rules, so we're not over claiming an amount in 1 year that should be spread across others. And so all of these pieces are meant to just give clear information and help you decide and think about that strategically. So, you know, finding those deductions, I think I had mentioned earlier, you know, was one of the cases just not being sure what in fact you can qualify for. What can you claim? So I don't want you to read tax law in like 4,000 pages and all of these details, but looking specifically for your business. And I'll share some insights and supports around that as well on what you can look at. Understanding the qualifications. I think that's the other thing. I don't think we intend to apply for a claim that we can't have, that we're not eligible for, but maybe we don't really understand the complete qualification of that. So there is nothing wrong with contacting the government yourself and asking them to explain it. They're very helpful. And I'll be sharing about a department that is available to help those as well. So again, getting that help, looking at the real cost of filing taxes on your own. I work with a team. I have accountants over the years that I've worked with. I've provided support for business owners, myself, and running multiple businesses for many, many years. And, you know, I think sometimes we think that the cost is so great, and usually, and my hope would be that any cost for actual tax preparation and bookkeeping is saved in your overall tax savings and strategy and planning. And so, you know, be aware of that. It doesn't hurt for a free review at the very least. So keep that in mind. So just an overview again of general business tax deductions. So I think I've touched on most of these. I will have this for a handout anyways. You can certainly ask me for copies. I've got some backup and data that I can share, so I won't go through these one by one. But just again, when you're thinking about different tax deductions, when you have a business for home, a business at home and a business for self, these are some of the things that you can claim. And the tools for support. So electronic filing systems, I am huge for that. I use QuickBooks Online pretty specifically. I find that to be very simple. I want to reduce the amount of duplicate entries in areas where you're taking one information from one spot and typing into another spot, which would be the Excel spreadsheet that I know many of us have run, but looking at other options and paperless options, opportunities to upload varieties of softwares and apps out there. I'm not going to get into every one of them, but a lot of things are available now that you can get into easy. So take some time to review that. What's best for you? You know, what are you looking at on the most simplistic? I've had some where it doesn't fit. If it's not going to be your forte, then you can stick with your Excel spreadsheet, but what can you do to support that? There's downloads from your banking into Excel as well. So there's many different ways to manage where you're finding that clean process, ensuring that you're still keeping a paper record. And I think that's something that a lot of us in this electronic world, I mean, I hate killing trees and printing too many things. However, the government will want to see that. When they want the hard copy receipts, when they're looking at a review, they do expect that. So when I'm considering prepared for audit, a lot of that is putting it clearly together, even if it's an electronic folder on my computer backed up that I can print. Because keep in mind, the government, in the event of an audit, everyone's trying to stay on top of things as much as they can, but you're not necessarily getting the audit in the year that you filed that return in. So keep that in mind. I'll share some information about my audit. It was a 2-year audit, and it occurred 3 years after those 2 years were filed. So that's, to me, essentially 5 years later, and they did a full 2-year review on me. And so with that, you've got to consider, I sometimes struggle with what I had for breakfast. So when I'm trying to remember what and where everything is, so ensuring that paper and electronic is very, very clear, accessible, and backed up. So I'll talk about that a lot. And so tracking your mileage, I touched on this earlier. I've got one link here. There's many, many mileage apps. Just honestly, as simple as possible. A lot of them on your phone, you can just swipe for business, swipe for personal, and it will track it. Make sure you get one that's going to print out a report so you don't have to like try to go through there later and figure it all out. You're basically looking at those totals of kilometers. So I've got one link here. Also, I mean, you can use your written logbooks, and Excel still works. It is, again, up to your complete preference to keep things as clean and simple as possible. But they will ask you for a mileage record upon an audit of your vehicle expenses. If you're claiming any vehicle expenses as an employee, if you're claiming them as commission based, if you're claiming them as a business for self, if you're incorporated, your track of your mileage is important, is imperative. Without it, you could completely have a loss of that claim. So keep that very much in mind and take the little bit of effort. And I think that's the key, is taking a little bit of effort in hopes to save yourself a lot of money and time down the road. I mean, I think that's the main piece in wanting to share, having the right systems set in place, having the ones that work for you, and making it easy so that you are that person when they ask you for your mileage record that says, no problem, here you go. And you print it off and fax it to them, or you can submit documents online now in your CRA account. We've really made things as simple as possible. And it's a matter of just having that in the place that you need it, easily organized, is my opinion. So, audit ready taxes. So with that, again, looking at that tax preparation and set up in such a way that there's no surprises. So that's pretty much what I've been touching on, right? Always being prepared for an audit. So simply every line that's put on for your medical expenses should have a backup receipt that adds up to the same. That's what the government's looking for when they ask to see those receipts. They're not doing it to be difficult. They're not doing it to be hard on you. It's a simple mini audit that has allowed us all not to have to send in that paper. Could you imagine? I don't know if some of you hopefully are as old as me and remember having to send in all that paper. So we've been given this opportunity, and based on that, it's trust, in fact, that we will have the backup when the government does ask for it. So organize and file accordingly. Now, the other piece here around bank and credit card statements. So that, to me, was key in my experience of an audit, because, again, they went back a number of years, not just a case of, oh, here, print out my last year. I don't know if any of you noticed on your online banking, but generally, if you're looking at more than 1 year back, they're no longer present. So many of us are like, oh, I'll print it when someone asks me for it. Well, I couldn't. And I'd also changed a number of my bank accounts, and I had even closed certain bank accounts in this period of time. And, you know, we were always, I don't know, maybe I'm the only one adjusting my banking and different things based on, you know, what's looking best for me and my business at the time. And so there was a lot of added costs for me, specifically costs in paying to have these statements recreated for back years. But also the biggest cost for me was the cost of time. So the amount of time spent going in on the phone, picking up, reviewing, and then getting them, of course, to the government was, you know, for me, I would have preferred it to be all set up. So from that, I'm letting everybody know every year, print them. If you have spent, I know you're keeping all your receipts, right? We do the best we can. And of course, I want everyone to keep things as clear and in order as possible. If you have spent any business expense that you've claimed in your tax return on your credit card or on your debit card, just print them. Print the statements. I even go as far as highlighting those expenses that I've claimed on my tax return. Put them in a folder. Put them in a folder with a backup of your return that you filed, obviously with the actual receipts too, but at the very least, you've got the tracking of how and proof on how it was paid. And the government will review and look at those bank and credit card statements. Those are key, which can be quite helpful too. But don't hear me wrong. I'm not saying throw your receipts away, but do print your statements. And we've talked a lot about understanding the deductions and the rules around them, because I think that is the key piece, is that if we're claiming something not intentionally, but claiming something that we don't actually qualify for. And so they do have a CRA liaison officer now. So this department, I would say, is valuable to check it out. A number of things that have been really helpful for small business owners. So they've got the benchmarking comparative. So that's really neat on when you're thinking about what can I claim, what can't I claim. it kind of allows you to take a look at the industry in your sector overall in general and see what type of claims are happening, what percentages, where are you landing on that benchmark. So really valuable information that the government is sharing with us, which I think is great. You can also connect directly to them on their website and book an appointment. There is no cost for the review and no risk. They're not going to review your taxes and then file you back with a bill on if you've made a mistake. They're not there to look at creating those. It's more along the lines of looking at setting things up for success. So wanting to see that be as valuable for you as possible. So really good resource with Revenue Canada. And so for more questions or anything else, obviously I love talking finances. I love providing solutions. I do offer bookkeeping and tax preparation services, as well as I work with a number of accountants for referrals. So I work with clients based up to their needs and then have a team to connect from there. So I'd love you to be able to follow up with me, see where I can add some value, and let's talk finances and let's have a great new year. Thanks so much for coming on, and I look forward to hearing from anyone and following up with some strategy sessions.